Good evening. Welcome to Options Tender. It is Monday. Happy Monday, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. We have a lot of information we're going to go through. We're going to go around the horn on SPY, QQQ, IWM, DIA, the Dow, and we'll finish off with the VIX. We just want to give like a roundabout thing of kind of roundish off thing of what we're doing here and what we see from my perspective, from an optical view, and a couple indicators, all saying that we're about to or have gotten the reversal. I don't think we necessarily can confirm on the SPY, but QQQ, I do believe we have a reversal, and that should pull us down, pull the market down to begin the descent at this point. All right, so don't forget to like the video. The best thing that you could do for this video is to like, so I really appreciate it. If you want to help in other ways, please go down in the description. And if you want to join our free Discord, stuff like that. Anyway, we have SPY on the daily time frame. We're looking at, we're at some resistance, rejected off of it. But the thing is, why we can't confirm, you see the pivot we had here, that channel that we've been talking about for so long, not confirmed as a channel, but it is definitely a pivot. We tried to break down from it. The market tried to break down and actually held that pivot along with the 8 EMA. So if this really wants to make another high, there's another good high at 461.63 over here, and I do believe there's a gap. I don't show it on this one, but I do believe 461. We have a large gap from about 465 area down. We gap down to 460. So that gap, it shows on other, I have the gaps on SPY, not SPY, SPX, and also the futures if there are any gaps. So the 460 area got just about to, if the gap's there, then rejected off there. But so we're holding right now as a potential bounce point for one last move up here for 461. It's possible. I don't know if that's the case, but if IWM remains strong, then maybe we do get one more move. And what I really want to emphasize is if we do get this move, that all that means is that IWM and maybe the Dow are strong, while the Qs, a lot of the individual stocks, the big mega stocks, have already made some pretty substantial moves to the downside, at least to start this trend to the downside. And maybe they want to bounce at this point. So being turnaround Tuesday, perhaps we get a bounce in those big tech stocks, and we're already strong in IWM in the near term. So that would be enough right there for SPY to go try to make some new highs and enter the gap. And then we have resistance at 461.63 here, still making a lower high in the scheme of things. I think this high is good. And what we have to keep in mind is SPY made a new high here for over the July, just by a few pennies. But SPX and ES, the S&P 500 futures, did not make that new high. So there's in a sense, there's unfinished business. So if we get that now, I think that'll be healthier for our move to the downside. Otherwise, that will kind of leave us in limbo. If SPY made a new high here, we're going to have sort of different counts for SPX and ES. It makes it a little bit more complicated, and we'd have to lean towards the fact that we're looking for a higher low. We'd have to lean towards that if we don't get new highs in the other indices. Otherwise, it gets really complicated, and somewhere near, if we get a breakdown in a bearish scenario, if we get a breakdown, then we're going to have to finish off in a way to where in this next leg to where SPY, makes a low, and SPX and ES futures are going to have to make a new low. Even, it's going to scramble some things up. So my mind says that tomorrow tech stocks will probably want to bounce after making their initial move down, helping with the IWM, and we'll go through that. The IWM, we got past the 62% retracement, so we might be heading higher, and that might allow SPY to actually make a new high here, make a new high in the SPX and ES, and kind of complete that unfinished business before heading lower. Hope that makes sense. But when it comes to indicators, this is the only one I'm going to show on here. We're in every single sell condition, except the fact that we don't have the histogram, we don't have the MACD confirmed roll over here with the red histogram. Okay, so that could just mean that we're right here at the zero. We get a little bit more of a bounce, make another divergence high, and head lower. So everything's pointing. We have all the divergence. We're crossing over the negative 20 area, negative divergence in RSI in the daily time frame, negative divergence on MACD. Everything's pointing to a rollover, except the fact that we have some unfinished business. All right, so going to the Qs on the daily. Now the Qs have come up to some great resistance right here in the middle of this this huge consolidation area. Reversed. We're underneath the 8 EMA, unlike the S&P 500. Gap down below. We're starting to push off of the 20-day moving average, and we have this doji off here. So that's even another example of, hey, we might be starting to move to the upside, at least for a little bit of a bounce. We get this bounce in tech that allows the S&P to get a new high, complete everything, and everybody's happy. So we pushed off of this gap here, huge gap, the breakaway gap, started to test it. 20-day moving average held it, and we could possibly close a gap here and bounce a little bit higher. We'll look at the lower time frames to kind of see what we think about that move and how high we think the bounce could be. And IWM just looking pretty strong here, got over that mid-range, so we're looking for that. Not testing it or anything, just continuing to push higher. And I'll go ahead and show you already off of the Elliott wave. Being the top here, we're looking at this possibly being the top. We're going to push that 2 up here a little bit higher. We have into the 190 area where we get a lot more resistance area, and that'd be the 786 retracement. And that continues on with our same plan here where we had an A, B completion, and we're looking for a 1, 2, and a much lower price level. We're not rejecting. We're not showing any sign of any reversal yet. So this looks strong. We are short IWM. We added on a position today. We'll continue to short IWM, but we're looking at 190 to 191 area as being the possible completion if we want to update some of the projections here. Okay. So what we're looking at this being is an A, B, C for an A, largest degree A. We had our B consolidation as a triangle, and we're looking for the C impulse move, possibly to the 191 area. And the alternative situation would be this continues higher, and this is possibly a 1-2-1-2 scenario where we thought it would be more of a A, B, C, get the correction with the rest of the market, and then head higher. That would be our alternate scenario. But if this thing continues to just push higher, we'll have to consider other things. But what we're bullish in the IWM in a sense. I know that I said I'm short. We don't know what's going to happen, but we have a gap here. We have 786 retracement from this high to this low. And we'll look at the 190, 191 area for this push. We get on top of this area and hold, then something else is definitely happening. Much more bullish, 1-2, 1-2. Then we got some wave 3 that's going to continue much higher and grind and be nonstop. And I that would be our last case scenario at this point. But right now we are looking for this to be an A, B with the triangle, C in wave 2 at the 786, and then lower. Okay, and that will allow the market overall, SP 500, to get a new high, a new divergent high complete on the SPX and ES, and SPY already made the new high, and then we can satisfy all those needs for us to make a market top and continue much lower. DIA, I was just going to take a glance at it. Just making a remarkable move. But to show you, we just have a little bit higher to go. So if we look at the candle pattern, we do have a Harami, a possible reversal signal. But this might just be an inside day for a little bit higher prices. So we'll watch that. We still haven't made a new all-time high. Is that possible? Sure. The DIA can go much higher if it needs to. Continues to press, and new high or lower high doesn't really matter to me in my projections. But I do think we have just a couple more points to the upside, and that will help the market do the things that we just talked about a little bit previous. Okay. About SPX and ES completing the unfinished business. All right, so let's go to VIX, and then we'll make our rounds to the 65-minute charts of all of the same things. So you see we started making this now a channel. After we made lows, brand new lows, we're starting to get a little bit of movement here, and I do think we're going to break out of this channel on the very bearish end of things. Otherwise, we just had this falling wedge, and if price and the market wants to go much higher after a pullback, then we're looking at this wedge breakdown, and we're going to make a back test. And if we make a very steep pullback in the market and the Qs to test those pivots and all those things that I talk about in the other videos, then we're probably going to test this channel again with the VIX. So the VIX will make a very good point, and if things go the way that I project, that I've been talking about, then the VIX is going to make a rejection off of this channel, pull back, and then go higher, and that is very bad for the market. If the bullish market scenario happens, then the VIX made a new low. We're going to test back up here and then make lower lows. All right. Hope that makes sense. We're starting to roll over. We have our reversal signals. We're starting to get bullish on these VIX plays here, and we are getting the histogram turning green here on the index, on the VIX, and we're also holding the 8 EMA so far. So we'll see how that goes. All right, now let's go around the horn one more time, starting with SPY. and we'll go on the 65-minute. We'll end this for tonight and see what kind of information we get leading into the rest of the week. We have some data coming out, and the data is going to be super important. Not by standards of what I think. I don't look at the fundamentals. I'm not going to be studying the numbers and things like that. But when the data comes out, the market is going to, and most likely the bond market is the one to look at with TNX. A big move in TNX to the upside is going to hurt the market. A big move and a correlation beginning with SPY and TNX to the downside is going to do the same thing. So the market is in a very, very bad position as of right now. And so all we're looking at on this time frame is this channel. So far, this channel is holding SPY up right now, and all I can get out of this right now is a 3-wave move. To me, that says we have one more high to make. We didn't quite test that gap, if you notice on this time frame. So I'd imagine we test the gap, we get higher, we test the top of the channel, and that's our additional objective short one more time. Okay, and then we start heading much lower, probably past all these areas, but we'll keep in mind that we could bounce. Not only bounce, we could make new highs after our huge pullback. But if the VIX makes that large move to the upside, testing the channel top, that probably means that we're making a very large, deep retracement on SPY and holding some of these pivots and or the retracements here. This is the 60 to almost 80% retracement, which comes to the rising pivot down here, which would end up being a new trend line. We get a bounce off of there. My bearish scenario says we just bounce and we head lower. The bullish alternative says we just keep going. Same thing with the Qs. We changed the board here on the Qs for the 65-minute. And we're holding support so far with this this gap here. This is a gap open from way back here in August here. So we had a gap, we gapped above, so it's an island gap technically. That's why it's white. We're coming to it, and it so far you can count this as a 1, 2, 3 and a deep 4, 5, to where we're just pulling back for wave 2, and that this is initial wave 1 down here, wave 2 back, and we continue lower. A couple ways you can look at it. It could be a 1, 2, 1, 2. Okay, so there's options here. This could be a 1, ABC, leading, not expanding flat, but a leading flat. So there's a couple different ways you could look at it. But I do think all of this is bearish. I do think the top is in. We're down to the expected move for the week already in the Qs. We have this gap here. I'll go ahead and put there a gap. We're starting to get bearish. We're starting to make these bearish moves. Do we fill the gap? I don't know. But, I do think that we're going to retrace a little bit, allow the market to move up a bit more, and then start heading lower. And then you see our pivots. Here we have our rising pivot. We have our retracements. We start breaking this pivot. There's not a whole lot left that can hold us. We're already considering a fake break from this channel or pennant breakout, and so maybe we're just back testing and going higher. That's what we're going to have to watch out for alternatives, but we're going to play this pretty deep before we even take any profit. We haven't taken anything off yet. IWM, not much more to show you. We'll go to the 65-minute. not much more to show. We do have around the 190 area. You see this big resistance right here, and we also have the options expect to move. That's where we think we're going to go at this point. Okay, these simply could be our wave 4, and now we're getting 1 2 1 2 1 2, and we have to play out those 3 4 3 4 3 4. Kind of like a mirror image. We have our extended wave 3 here already done, but then you might have to play out a couple more 1 2 1 2s and into 3 4 3 4, which would get us to that target of 190 to 191 area. DIA doesn't really matter at this point, not on this time frame. Totally mixed up that with VIX and DIA. So we have the VIX. We'll move down to the VIX. Is going to show us optically just a little bit more of a bullish scenario on the market. So we broke down from this rising from this trend line, broke down from it, back tested, and we're breaking out again. But we had this this rising bearish wedge, broke down from it, and I think we're going to back test that wedge. From this point of view, it just shows that we're going to head lower, or at least make a rejection off of it, find a higher low, and head up higher. So still same things to look for. We're in limbo. We can't. We think we're going to go higher, but there's nothing that technically that says that from this stance, except some of the higher time frame indicators, and also our timing with higher degrees. The inverted, we talked about it before, the inverted yield curve, which seems to be coming to an end and normalizing, which is leading to us having a recession. Now, with that said, that could mean if we do, I wasn't planning on pulling this up, but if we do, let's look at we have the FOMC I was looking at earlier. We start looking at December, just a slight chance that that the Fed moves the rate, cuts rates, and that would be a really early pivot. I don't think that's the case. January, again, there's a slight chance for a rate cut. Oh, sorry, the other was actually a rate hike. So no chance coming in December that there's a rate cut. But we're starting to get rate cuts in the future for January. And, that kind of leads right along with what I was talking about, that we have a top in for all-time highs, but we possibly have some time to go. If the Fed cuts rates here on January, then the market's going to head lower a lot sooner than anticipated. We'll just have to see where we are with price action. But looking at March, now we're talking a 51% chance of a rate cut. So we'll see what kind of data brings this week and beyond, and to see if any of these numbers start changing into January, March. I do think March is a great target to have the Fed pivot, to have our sharp decline. But what happens in the meantime? The market can be down into a Fed pivot. Okay, it doesn't have to be up. We don't have to make all-time highs into a pivot. The pivot just suggests that that's the nail in the coffin. So that's where we're watching so hard right now. I'll continue to reiterate what's happening with those pivots, but that's January shows that there is a possibility that the Fed cuts rates. And remember, we want to say on this channel, remember that the Fed only does what the market forces it to do. The market is the boss. The Fed only follows suit. All right. I hope that's clear. If the market in the economy, all the economic data is deteriorating, and the market says, "Hey, we're cutting rates," then you can watch that TNX, the 10-year Treasury bond rate. You can watch that tank, and the market's going to correlate with it, and the market's going to go down with TNX. And then the Fed's going to be forced to pivot because of the market. It's not the market. It's not the Fed leading the market. It's the market leading the Fed. All right, I hope all that helps. We'll do another video tomorrow. I appreciate you joining us. Don't forget to like the video. Have a wonderful day. Have a wonderful night, and we'll talk to you soon.